Hope everyone had an excellent week last week. So basically, just giving you a quick rundown on how I used a Fibonacci retracement tool, which I'm sure a lot of you guys know that I do use on a day-to-day basis in the markets. So yeah, I'll just give you a little rundown on how I personally use it. This tool can be used generically in a lot of different ways. This is the way I personally use it. Doesn't mean to say it's going to be right for use, but obviously it's working for me, so I'll share it. So to get the Fibonacci retracements, all you need to do is just come over here, click this little arrow, come down to where it says Fib retracement. Right, so this is the Fib. Yours won't look like this from the start if you haven't used it before. So to get it the way this looks, and to use these details that I'm using, these numbers, double click one of the lines and then you'll pop up with this box. Take a screenshot of this or just pause the video on this and have a little look. So what I use, make sure this is ticked. These are the color schemes I use as well. So black, this will probably be ticked for you as well. Uncheck this, which is the 38.2. Check the 0.618. I'll put that red. Check 1, put that black. These will probably be checked for yourselves as well. Uncheck both of these. Check 0.786. Some of these numbers mightn't be in. All you need to do is just click on it and just obviously change the numbers yourself into these numbers. I put that blue. 0.71. I put that purple. Make sure that's checked. And our D1 extension, which is minus 0.27, I put that red as that's our target. And recently I've just put the 1.272 in, which is this one right up here. I've put that in black. So the reasons I'm actually using these specific numbers is to show you what normally you will see it probably look a bit like this. So the way Fibonacci's work is when you get a big bullish move or down, so let's just work on the bullish buying the market at the minute. So you've got a big impulsive move to the upside. Most bullish and bearish moves have to have some relief in the market and have a little pullback. So we could get a pullback like so before taking back off into the market, taking the market higher. So this is generally what an uptrend will be looking like. So we have this big bullish move up. Now a lot of traders will place this Fibonacci retracement on like so. So yeah, that's one thing. So when we are buying the market, we want to place the number 1 at the bottom and the 0 goes at the top of our bullish move. And now we can see, so most times pullbacks, specifically in the pairs I'm trading, which is GBP or your CAD, your GPY, your USD, they normally have big pullbacks before collecting more orders before going long again. So a lot of people use the 0.2338 and 0.5. Personally, it's totally irrelevant for me. And you might get a few little bounces from there before playing about. Sometimes you could just bust off from there. But personally, I don't like using these. I wait for the more deeper pullbacks to get a better entry. And also that means a better risk to reward. And as you know, risk to reward is one of the top key elements in being successful in the markets. So, personally, delete. Some people can use the 0.5, which is basically 50% of this move. So it's retracing 50% of this move. But yeah, I look for this area. between the 61 and the 78. This is the perfect buying area, and I'll just show you what it looks like. I'll show you what it looks like on a downtrend. So that's a downtrend. So if we want to place the fib, we'll place it from the high to here. So as you can see here, we've placed the 1 at the top. That's the base of our move. This is where we maxed out on the move. So now we're looking for the pullbacks before we continue back. Sorry, we're looking for the pullbacks before we continue selling into the market, as it's just the opposite of what this is doing. So let's just get rid of these markings right now. They're irrelevant. You guys can use them, but I personally don't use them. So as you can see, we've got our ideal buying zone here, which again, most times we want that deep pullback before getting nice longs or shorts in the market. And once we do get deep pullbacks, we can get better risk to reward. So say for instance we enter on the 50%, which is around here, and we're targeting the D1 extension of -0.27. As you can see, if we're entering around the 50, realistically we need stops to go below the 78.6. We have to 20 to 30 pips below it. If it does go below it, then it could invalidate the fib. But as you can see, if we're entering on the North 50, which is around here, we're getting just above a 1-to-1 risk to reward, which is, it's not good. Personally, I look for at least 1 to 3 in any trade. So you risk £30, for instance, or you risk £300 to gain £900. So that type of risk, we don't want to be risking £300 to gain only £300, because we have one losing trade and we've just lost or they're winning. Where if we have a 3-to-1, we can lose 3 trades and then win 1 trade and still be profitable. So definitely something to look out for. However, if we enter on our ideal buying zone, which is around here, we can extend the targets. Also, we can shorten our risk to around here. So look at this. We've got a beautiful trade here, which is 1 to 5 risk to reward ratio, which is lovely. That's how I use it. But I'll just this is just a clear chart. I'll show you now what actually how you'll find it on candlesticks. So okay, don't be put off with these candlesticks I've currently started to integrate, which are the black bodies and the blue wicks. Main reason for this, it eliminates all the psychological parts out, because if you're holding a trade and you are buying the market, you see a huge bearish candle in red, psychologically that's no good for you. Personally, I have now put them black with blue wicks, concentrating mainly on the bodies of where they're finishing, and just looking at the wicks in general, because wicks are very market telling type of thing, because we can see the pressure in the market, stuff like that. But anyway, getting a bit sidetracked, I'll get back on topic to the fib. If any of you guys wanna know a bit more detail on the black candlesticks and blue wicks, just give me a shout, or I'll make another video on something like that. So let's drop down to the 4 hour. Let's drop down to the 4 hour. So this is Euro CAD. So what we want to be doing is we want to be looking for our highest possible swing point to our lowest possible swing point. So if I'm looking to sell this market, so if you're looking to sell it, you put your 1 at the top, you put your 0 right at the baseline where the wick was right here, and then was quite a large fib play this. So as we can see, we've come down lovely. Had a little spike here before we've consolidated a bit. We've pushed up higher. I did have this entry on. I did show this on the group. I think we was around this type of price here. We've pushed up, and as you can see perfectly, we've touched the 71. We've wicked into it on the 4 hour. Wicked perfectly into it on the 4 hour. Closed back below the 61.8, which is quite crucial. Hovered around it for a bit. Personally did think we was going to get another spike into it to see how the liquidity holded, but we never. We just plummeted from here. And as you can see how powerful this move is. Doesn't happen every time, of course not, but up to now, some moves you'll get, it is really nice. And if we put a risk to reward, a short position, this is where I'd enter. I'd probably put my stops around 60 pips, just above the 5.8 psychological level, before we put our targets to the D1 extension. So which is 250 pips. We're now running from this lovely move. We're running 200 pips plus, and we're just coming shy of our target nearly of the D1 extension. So that would be a lovely trade if anyone's in it right now. 100% move your stops to break even, so you've got a risk-free trade. I would definitely take some profits off the table here, maybe 70-80% of your position before letting the rest run to down here. Let me just see if I can get one. Sometimes my eyes will just adjust. This takes a bit of time where you can see fib setups. Yeah, here we go. So we've got a lovely buying one here. Lovely buying opportunity here. Plotted our fib, our 1 at the bottom, because we're buying the market this time, up to the highs. So we've dropped hard into our 71. See these big pullbacks I'm talking about? This is what we like before we continue buying the market. Failed to close below it, had a little couple of hours in consolidation, bursted above it, come back up to retest this zone, couldn't really break above it before plummeting again, once again, to our 71. This time we've touched our 78, which is really nice. And then as you can see from this reversal, look at this 4 hour candle. We have just clean broke back above it. Broke out of this, come back to retest, consolidated before we've just flew to the upside. This move here could take the target, but this is what backtesting goes on. Let me just get a long position. So we could take longs here. I'd probably wait for this one. And then as you can see, for our stops around here, and we've got a beautiful reward to a risk, just a reward here. Again, could have pulled out here shy of about 10 pips, but then again, we've just smashed through that target again. This does show you just how powerful fib tools are and why I use them. Hopefully, now you guys have got a little better understanding of how fibs work and how I use them, especially these key levels I'm using. And if a fib meets up with a round psychological level, so we've got our say our 71 met up with 58, and it was a support or resistance zone, that just builds more confidence and confidence onto taking that trade. Personally, I like to have at least 5 confluences to take a trade. These could be fib retracements, trend line, market structure, candlestick patterns, these sorts of things. I personally like to take 5, and momentum as well. But I do know some people that take 2 or 3. Personally, 5's good for me. The more the better, of course. You can even stick some trend lines in there as well. But yeah, as I say, if anyone wants any other videos dropping on what I'm doing and how I'm using it, give me a shout. Other than that, it's Sunday now, waiting for the markets to open in a couple of hours' time, and hopefully we're ready to catch a fair few amounts of pips again this week. So take care and enjoy the rest of your trading.